Hello, everyone. Great to see everyone out here. How's everyone doing this morning? Good. Can I get a little more response from the audience? Good. Great. Awesome. I want to get a profile of the audience a little bit. People who would consider themselves executives, professionals in their domain, raise your hands. People who are investors, raise your hands. Okay. Entrepreneurs, raise your hands. Okay, good. So actually mostly executives in the room. We were actually discussing the makeup of the room yesterday and how to target this audience. So it's a pleasure to have this amazing panel here with me today. These guys are industry veterans. Wael Fakharany was one of the first people at Google in Egypt, one of the first people at Google in MENA, and started his career there in 2007. Dany Farha was one of the founding team of Bait.com before becoming an investor, and that was in 1999. 2000. Hany is one of the oldest venture capitalists in Egypt, not by age, but by time of being in venture capital. But he oversaw some of the earliest deals in investment in Egypt, starting in 1999 as well. Yep. And Khaldoon was one of the earliest, actually, maybe the earliest of all of them with with Arabia Online, his first venture in 1996. So collectively, we've got like 50 years of internet experience here, both from the operations side and from the investment side. So without further ado, our topic today is around innovation and investment. And I wanted to kick off with asking the panel, where do you see innovation in MENA? And where do you think we have a competitive advantage to innovate?
Want me to start?
Yeah, go ahead.
All right. So it makes more sense to do innovation on what I call innovation on the edge in MENA, because innovating at the core, you have to be more close to early adopters. So, you know, basically all the business drivers, all the market drivers tells you that it would be a bit suicidal if you want to create the next Facebook or Twitter in MENA, but tells you that, you know, it makes tons of sense to set up, you know, e-commerce for fashion in MENA, because that's innovating on the edges and that's coming closer to the market. So that's more or less my view. If somebody wants to innovate really at the core, then he's probably off, you know, to the West Coast.
Okay. Guys, any other thoughts on this?
Yeah, I think it depends on your definition of innovation. I know we debated the definition of innovation yesterday, but all the businesses that we, and I personally have been involved in, and the businesses that we look to invest in, have to innovate. And for us, innovation is taking something that's being done in a certain way and transforming the way you deliver that product or service to your consumers. How that's measured is a whole different ballgame altogether. But I think innovation itself has an evolution curve, and we are at the beginning of that curve. I think right now people in our part of the world would like to be able to find properties online, be able to buy fashion items online, be able to be served with what is in the West, maybe the bare necessities.
Right, so both of you here are talking about incremental innovation as opposed to really disruptive innovation, right? Did you, Hany, Wael, do you guys disagree, agree?
I don't know. I don't know if you can sit down and define things as incremental or disruptive or any of those things. I think these are wonderful buzzwords, but in reality, I think you'd be surprised at the capacity of our younger generation to surprise us with things that we haven't thought of, and for me, that's the essence. You know, I've been listening to pitches since '99, and more, the number of original ideas and ambitious and people trying things that haven't been done globally, let alone regionally, is on the increase. So you know, I can't define it, but there's more of it around these days. And there's also, you have to understand, there's also an element of market necessities. In our part of the world, there are a lot of things that haven't, there's a lot of legacy infrastructure that's available in Western Europe that doesn't exist in this part of the world. And therefore, we actually have an opportunity to leapfrog in terms of innovation in certain fields. I think consumer banking is one of them. And I also think in uses of solar energy, these are things that we can probably leapfrog because we need them and we have the capabilities to do so. But to answer your question, whatever innovation is, there's more of it around than we give it credit, and it's increasing.
Right. Well, like I said yesterday, I didn't want to get into the debate around what is innovation, but rather where can we innovate as Arabs? Where do we have a competitive advantage? And this leads well into my next question, which is really, what are the hottest spaces that you're investing in these days, and or that you're kind of considering are really fast-growing sectors in the digital space?
Well, I'll take that one.
Yeah,
so
sure.
When you say hot, we've just defined an investment strategy that we like for a whole bunch of macro and micro reasons. And just to simplify them, they are companies that can generate their revenues from businesses. So you can call them enterprise or B2C2B. They are companies that are in the infrastructure realm, whether that's payments or analytics or the likes. But for the entire ecosystem to exist and grow it more efficiently, you need that infrastructure. And we love SaaS, but we don't find enough of it. So if there are any entrepreneurs out there building some cool SaaS products.
SaaS, software as a service.
Correct.
For the audience. Okay. Other guys?
Sure.
Khaldoon?
So we feel that the consumer internet space is at the tipping point in the MENA region, getting into a hyper-growth era. And therefore, we're really interested and hot on what we call marketplaces, which are basically internet websites that help facilitate transactions between consumers and businesses, or between consumers themselves. We have a food and beverage transportation marketplace called Hello Food, which in the first 4 months since it was launched, it achieved the highest growth compared to all other markets in Saudi Arabia. We just announced a transportation marketplace yesterday called Easy Taxi. We have a restaurant reservation marketplace called Reserve Out. And we have a classifieds business, which is the #1 Arabic classifieds website, basically called OpenSouq. So all of these industries which are transitioning from the traditional, from the offsite world to the online world, and where there is a very clear value proposition and advantage for users to move online. So it's natural for users to move from print classifieds to online classifieds. It's natural for people to move from reserving a table over the phone to reserving a table over their smartphones or internet. It's natural for us to move from $100 million food court built in a mall into an online food court, which is what we have in Hello Food. So we're really, really hot on what we call marketplaces and classifieds. Obviously, that's because we're totally focused on the internet space in the Arab world, and we find all of those businesses synergistic because they share essentially the same user base, they share the same direct sales force on the ground, and will be continuing in this approach.
Excellent. Well, you guys run Google IBDA competition for ideas. Tell us, where did you see kind of innovation in those ideas that were presented to you, or where did you see real interest?
Sure. So I think the first thing, we love all of those ideas.
Okay.
As long as they are online, as long as they're growing the ecosystem.
Great, but we're all online investors, right?
Yeah,
but these
so
guys have clearly different strategies.
lovely.
One says, I want to sell to businesses. One says, I want to do marketplaces for people. What do you think?
We all love them because they're going to all use Google Ads. So at the end of the day, it's lovely. But again, I want to sort of talk a little bit about what we talked about innovation. So I think hindsight is 20/20. You know what I mean? I agree sort of with Hany when we say we want to define what innovation is, but there's a lot of local needs that are not being met on the MENA level. For example, traffic in Cairo. I would like to solve the problem of traffic in Cairo, and I would like to use technology to solve this problem, and I would like to, as much as possible, use all the technology in the world with the mobile phone, with crowdsourced data to understand whether my route is okay, or actually, I would say, زحمة or not زحمة in Cairo. so it's there are local needs that are not met, and in general, this innovation.
Isn't this something Google Maps should show me in any way?
Absolutely, absolutely. We're actually driving directions. We launched it. We launched driving directions, but it's taken some time to populate with
the traffic exists in Riyadh. When I go to Riyadh, I can see where the traffic is on Google Maps.
Yeah, it's there. But I'm talking specifically about local problems. So the innovation, so the entrepreneurship bubble that we created, that Google created, for example, in Egypt with programs like Start with Google, like IBDA, was okay to a point, to a certain point, but I think now we need to take it to the next level. The next level is basically, unfortunately, availing a lot of funds is very, very important. I think it's, a price tag of $1 million, $1.5 million, $2 million for startups is starting to become acceptable in our part of the world.
But if this is about challenges, let's hold on because I'm going to get to that.
Sure.
So, I want to get back to the question of interesting spaces, right? Is there some of the things that you might think are kind of fast-growing sectors of the digital economy?
Sure. 3 main things come into my mind.
Yep.
Obviously, video is huge. Mobile.
Great.
And then the third very interesting thing is programmatic buying or real-time bidding. These are the 3 main things.
So the programmatic buying, just for the audience, again, automated advertising, personalized advertising that depends on information that is available or your user behavior targeting you.
Absolutely.
Okay, great.
I just want to add one last statement. The only thing that I think, other than the disruption in education and health, but I think the issue of privacy, online, if you're talking about the online world, since Google is here, I think the issue of privacy and technologies that help protect the privacy without, because I think, if you look at the internet, that space, it's driven so much by advertising dollars that sooner or later the privacy issue will force governments to regulate it. And I think something or a set of technologies that help protect my privacy without foregoing the power of analytics, I think that's what personally excites me at this point in time.
Let's see, let's ask the audience. How many people here are concerned about their privacy when using the internet? Have a real concern about this?
The vast majority. How many people of those are under 20?
At least 50% of the audience agrees with you. So that's interesting. There's a quote from a professional contact of mine. He always said, that we have exchanged our privacy for convenience. So this is something that I think we all individually make these decisions to share our location, to share our data, so that we can get people finding us more easily or products finding us in a more targeted way. But I think it's an interesting topic and definitely a hot space. So let's go back to you, Wael, with the challenges, right? So what are the roadblocks hindering the growth of this sector? So
there's a lot of challenges, but I also I strongly believe that funding is still a problem.
Okay.
And I'm talking not the seed, not the first round, the $1 million, $2 million. I'm talking about an aggressive sort of $10 million price tag, $15 million in the internet space. In the mobile, in the internet space, I have not seen this number yet for a couple of years. We've been talking about first creating...
In e-commerce, we've seen it. With Nemshi, with Souk, with Marka. These guys have all raised in excess of 10 million each.
Yes. So Omar, what I'd like to say is that you've seen it actually in mobile yesterday.
Sorry, say that again.
Yesterday we announced a $7 million investment in a taxi dispatch mobile app.
Yeah.
So what I'm saying is by far 20 times bigger than the biggest investment in mobile app in the Arab world.
I think this needs to be repeated over and over and over again until we there's a stepping stone that I think in North Africa specifically we haven't reached. Okay. Maybe it's available in the Gulf, so that's one thing. And I think mentorship is really, really important. And I'm talking one-to-one, personalized sort of apprenticeship or mentorship is very, very important.
Great. Gentlemen, Dany, you want to take a...
I think the reason you're not seeing big ticket 10, 15, $20 million investments is to be able to write those checks out, one has to find significantly large markets. And the first thing that we do when people come to us looking for funds, and it's not the most important thing, but it's one of the first filters, is flip to the back of the business plan and see how big can this particular opportunity become, whether it's in revenues or addressable market. If it's not something that's sizable, it's a difficult venture capital investment. So I think that's our biggest inhibitor, is finding large markets or large opportunities to invest in that are disruptive.
And is this because the entrepreneurs are not coming with large opportunities, because the large opportunities are not there?
So it's a combination. It's sometimes picking a rather small market or a wonderful problem to solve, but maybe not for a large addressable market. And I think sometimes it's also maybe down to the ambition or the vision, if you like, of the entrepreneur. And that we can work through.
Guys?
I'll tell you this much. In the first session today, you can't do our business unless you have a vibrant venture capital industry. And that provides three basic things. The first one is value-add capital. The second one is Rolodex. The third one is some sort of hand-holding or mentorship across all levels. Whether you're like what we do in Flat 6 Labs is with an accelerator, whether you have it on an ad hoc basis for giving someone $20,000 to $50,000, or you get the people who, the next round of angels or the professional VCs. You need that level of value-add capital to provide those three basic functions. And that's what I think is missing in this part of the world. And when you ask me, as somebody who's been in this game for 10 years, the biggest challenge I would see is nurturing the next generation of venture capitalists. The people who like this job, not people who came in from private equity into venture capital, but people who actually are born and bred into the business of technology and VC. I think that is the biggest challenge.
So just to give
the personnel to actually to do this job properly. In Israel, the interesting thing, they imported the know-how through some sort of matching with the United States. Here, we are home-growing it through trial and error. Most of us have had our hands burnt. And I think the biggest challenge for us as an industry is to generate the next generation of VCs.
So Omar, it's important that we talk about this actually. First of all, is there a market or isn't there a market?
It's a huge market.
There's a huge market.
Okay.
Today you have 125 million internet users, which is twice as much as the UK or Germany, which is as much as the UK or Germany, and more than Brazil and Turkey combined. And
but with a lower average revenue per user.
Almost,
yes?
not really. If you look at the GDP per capita, look at the GDP
per capita.
Look at the GDP per capita for Korea, and look at the GDP per capita. Korea and the GCC are strikingly similar markets. South Korea, almost equal GDP per capita, almost equal population, and internet penetration is going in the same way. You find $50 billion worth of listed internet companies in South Korea, none in the GCC. You'll find last year amount of venture capital investment that went into the internet space in South Korea to equal $1.5 billion, while in the GCC to equal less than $125 million. Now, what you're seeing, just to add to that, what we're seeing, which is a natural evolution of the market, is that 89% of investment that went into the internet space in the GCC came from international investors. So people who are taking way much more risk than regional investors. Now you ask yourself why? Because we have a disjointed venture capital ecosystem and entrepreneurship ecosystem. Even look at this 125 million, you'll see it all crowded in the corner, all seed, early stage, accelerators, etc., and very few people doing the 500,000 to 2 million. So that's, I mean, it's not an easy situation, but the market, so for people who are brave, who can take the step ahead, there's a huge opportunity.
So let's just talk about scale. I agree with some of what you said, but when we're looking at opportunities, and I'm talking about verticals that exist in other markets, which we still haven't received in this part of the world. One of the very simple comparables we do is we take a look at a job site and a portal, and then we look at the comparable between Maktoob and Bayt.com and the incumbent company that we're looking at and see what the differential in revenue is. It's a great indicator. And typically, we're off by a scale of 4 or 5x to 20x. So I think we have a lot of room to grow. There's a lot of headway.
So just to explain that a second for me again. You're saying that comparing similar companies, you're finding companies abroad making 4 or 5 times
So
revenues.
take the leading portal in Turkey,
Yeah.
right, which has 35 million internet users,
Yeah.
which is a comparable statistic to our part of the world, if you want to combine the region.
Yeah.
Depends on what you define as the region. The equivalent portal, and there are 3 of them, are generating $120 million in revenue versus 20 or 30 for the Middle East.
Exactly the point that I was trying to make to Khaldoon, which is I do not believe that the average revenue per user, regardless of what you say about GDP, the average revenue per user on internet businesses is significantly lower, maybe 1/10 of the market, sophisticated market.
But his point is,
maybe Google can tell us.
this is now. What about
in our online food ordering business? We have one of the highest basket sizes in the world. And I can tell you from insights that I know into fashion e-commerce businesses, that fashion e-commerce businesses in the MENA region have one of the highest basket sizes in the world. I can tell you we don't have enough businesses. Actually, there's a huge gap between demand and supply. So there is much, much more demand in the market than what founders and entrepreneurs can supply. This is why
a big basket size does not mean that the average user is spending a serious amount of money. It just means that there is a small cluster of people who are online and connected and who are spending large amounts of money.
It's irrelevant.
Okay, so tell us Wael.
It's irrelevant because, again, I 100% agree with Khaldoon, because the 125 million users that are online right now are going to be 150 million users in 2 years. The 30 million extra users are more than the internet users in Spain. The 30 extra million. If you're to, when numbers start to become hundreds of millions, a very small percentage of hundreds of million is good. And if you have technology smart enough to take 1 cent or $1 from each per month, then you're basically set for success. The idea is there is not enough homegrown venture capital risk happening in this part of the world.
Okay, so then let's take this, because that was also Khaldoon's point, saying we're seeing the big investments come from outside of MENA.
Absolutely.
Guys, in the middle, why do you think that, why are you guys not
because the fund sizes are $1 billion plus, and you cannot invest more than 10% of your fund size, which means you can write a $100 million ticket if you're based in New York or the UK in a $1 billion fund. Whereas here, if you have a 30, 40, $50 million fund, you're restricted. You can only write a $5 million check out.
And why is it that we are only seeing $30, $40 million funds? Why don't we have a $1 billion fund in MENA?
Because our traditional investors, those who invest typically in oil and field, real estate, etc., don't feel the need to invest in online businesses because they're not well educated about these online businesses and because they haven't seen enough success stories.
Yes.
So they'll tell you why. I'm happily investing where I'm investing now. So why should I invest there? So it's a blueprint that you see across all markets, and we will get there.
Yes,
internationals have seen it before.
Yeah, that's the point. We will get there because the opportunity is there, and capital will flow to it. You also have to understand that we're competing with other industries that are also growing very fast.
Yes.
Yeah.
Right.
4 or 5
we're not
years
the only
ago,
game. Technology is not the only game in town.
So 4 or 5 years ago, a lot of investors were complaining that there isn't enough deal flow, there isn't enough risk, there isn't enough entrepreneurs with ideas. The situation right now is that if I was an investor right now, I would actually focus on finding the best team and basically playing a little bit riskier game, and putting a little bit more money, because of course we're going to reach there. But the idea is if you reach there in 2014, it's a completely different game than you reach there in 2018. The returns on your investment, if you are bold enough in 2014, will be a completely different ballpark game in 2018.
Great. So I want to wrap up this question and then, of course, address the comment that the reason why we're not seeing a $1 billion fund, LPs who are putting their money into these funds don't see big success stories. So let's talk about success stories and exits. Are there exits? And beyond exits, if we haven't seen them, are there people actually acquiring or who could acquire, who have an appetite for acquisition? What's the end game?
So there are very few exits, if any, and the reason for that is that exits usually happen through larger companies. So large companies acquire small companies, and we don't have large companies yet. So this is, it's as simple as that. This is why we don't have.
So then how are you all going to monetize your investments eventually?
We have to create, we have to create the large companies. So, people who pioneer this will find it much more difficult. But I would like to go, one more step to the last question, and this is very important. So I want to tell you now. So I want to ask you, what do you think is the market cap multiple of the largest internet company in South Korea compared to the mobile operator and telecom operator in South Korea?
I'm going to let you answer that one.
So Naver, which is a listed mobile company, which is a listed internet company in South Korea, is worth 3 times more than Korea Telecom. Mercado Libre, which is an e-commerce operator in Argentina, is worth 2 to 3 times more than Argentina Telecom. This is the blueprint.
Khaldoon, is this why Salat's giving you their money?
This is the painting on the wall. This is the painting on the wall that will happen in the MENA region in 5 to 6 years. But people who are brave enough to go ahead and do it first, are going to benefit from that.
Are there operators in the room here today? Telecom operators?
Not necessarily. I mean, the investors.
We see the fundamental issue here, essentially, with the operators, at least.
No, but
they didn't show up.
I'd like to.
They're not here.
They're busy.
I'd like to say one thing, right? I've been lucky enough to have made my first investment in '99, and subsequently manage a few funds. Over a 7-year period, which is the fund period, exits were not a problem. I mean, out of the 30 or 40 companies we did in the first 2 or 3 funds in my old, we probably sold 20 of them.
OT Ventures bought them all?
No, OT Ventures bought some of them. Maktoub, you see, that's an exit. And then OT Ventures itself sold their, the exit's not a problem if you build a company that's built to last. So honestly, I mean, when people come and tell me the exit, I just say, listen, our job is to help you build a company that grows, that's sustainable, and that's going to be sooner or later profitable. Once you do that, I can guarantee you, the exit will find itself. You will be surprised where the exits will come from, and your job, really, my job, is to build that, is to find and build that company.
And the exit will happen.
Please. It feels very...
The exit will happen.
That commentary is very spiritual.
No, honestly, that's not true. I'm not speaking from some... I'm speaking from my almost 15 years in this business, right?
Do you have a checkbook now?
Do I have a checkbook?
Yeah, like
no, I always worked for other people.
We're still here, yani, after 15 years.
Yeah. 15 years in this business, right? Honestly,
you
build a company, you will find an exit. But you just got to build a company.
So let me tell you a little story. I have a lot of friends in private equity and venture capital that have a lot of experience like Hany and have seen many exits. And I have this nice little quiz going where I ask them, so think of a few companies that you guys have exited, that you personally have been responsible for exiting. And they say, yep, okay, these companies. And I say, go back to when you actually did the diligence on the company and wrote your internal documentation. And there was a piece on exit that said, we believe we will exit this business to this company or these set of companies, or even maybe an industry type of vertical as a strategic. And the correlation between what they planned and what actually happened is almost zero. And in my experience, I mean, I've exited a few businesses. Who I thought would be the eventual buyer was dead when I came around to wanting to sell the company, and there was a LinkedIn that was the monster of the flavor, if you like. So I think I agree with you. If you build a company that's defensible, that's profitable, that has great management, has great systems, has a great value proposition to the stakeholders involved, if you want to sell the business, you can sell it pretty easily.
Okay. Well, I'm going to wrap up with one question and then turn it to the audience. We talked about initially expecting to get, as Khaldoon said, expecting to get a Facebook out of MENA right now is not really likely. So my question, I turn it back to you and say, what will it take to get a global success out of MENA?
I don't agree with the statement in the first place, so I can't comment.
Then let's sideline that the intro sentence and then go back to the question. What will it take to get a global success out of MENA?
What is success? Define success.
3 things.
3 things.
People, models, and money.
Sorry?
People, business models,
yes,
and money.
Okay.
Lots of money.
Lots of money. We've talked about this. People.
People, frankly, it's very tough, but you can be innovative. So we have a real problem with talent. Models are easily available.
So here is
And
the
money.
problem, in my opinion.
Okay.
My opinion is that all the ingredients are there, but the recipe is just not good. So the market is there, the people is there, the people are there, the technology is there, but somehow, and obviously the money is there. You look around, the money is there, but somehow nobody has been able to mix all of this into a good, successful sort of global recipe. It starts with the money. It does not start, because if you find the right people with the right technology and the market is there, you need to fund this. And you need to fund this in a brave, it's called venture for a reason.
Hany, you had some thoughts
No,
on
no,
this?
it's you have to understand that you know, if you happen to be born in America or the Valley, the number of people who have built and scaled successful companies are there. You can find them. We don't have, as the people part is, who have done this is very important. And the problem that we face in our companies that we believe have global competitive products is that they need to convince people who have done this, usually in America, to come on board. And since they don't know them, they have no point of reference, there is no referral, we find it difficult to attract the sort of people who can help us grow. We don't have the talent to actually...
People.
Yes.
Money.
So
forget the money.
People.
Dan Senor, I'm not sure if I'm pronouncing his name earlier, the gentleman who wrote Startup Nation and spoke to us this morning, I think made an extremely valid point that goes back to, we have one portfolio company and one company or one entrepreneur that is of Arab origin, that is in the US, looking to transition back to this part of the world, and that has built a prototype for a business that could be disruptive, that is online, an internet business that we really, really like, and it could easily be developed and grown out of Dubai or wherever he may choose to relocate back to this part of the world.
How much money does he want?
Not a lot of money. You'd be surprised. I mean, the kind of checks that we personally could cut him.
So what's the problem?
There's no problem. We're just hoping that this person comes over. It takes time to get to know people, to build chemistry, to understand the complexities of a business and help execute that business over time as a value-added investor.
Okay, I'm gonna turn it to the audience. Lots of questions already in the audience. We'll take. Is there someone helping with the microphones there?
Hello, my name is Amjad Tadros. I'm the founder of Shufi TV. I have a small comment and a question to Khaldoon. I agree with Dany. Yes, I built a company and I did a partial exit and I never realized who the buyer was till the last minute. One of my clients bought me out basically. And it was an Indian company, just from nowhere. And it happens, you never plan for it before. My question to Khaldoon is that, don't you think that the fact that the Arab countries, are so fragmented, look, even here in the UAE, you have, different rules in every place and different currencies, and, we from Jordan have to get visas to travel over here and different rules. Don't you think that's the hindrance that we cannot build these, mega-sized companies?
I couldn't agree with you more. This is one of the biggest challenges, and I think this is why it's so expensive to build basically businesses in a VC fund model. This is why we haven't structured our business as a fund, but rather as a holding company, and we provided this platform. So a company in Cairo, Amman, or Beirut who gets funded with $500,000 or even $1 million will never be able to get to a stage where they can actually sign contracts and invoice in Dubai and Saudi Arabia through this 1 million. Because they'll spend all of their money before even being able to get a work permit for 2 employees in Saudi Arabia and the UAE. This is why the 220 fund model wouldn't really work, because you don't have enough resources to support these companies. So you give them the money, they spend the first, even worse, the tens of companies that only get their first $50,000 to $200,000, round of funding, and then they fall in the death valley. And we're seeing, unfortunately, too many of them today. So this is why actually inside iMENA, we have built a platform, a legal and operational platform that exists in Saudi Arabia and exists in the UAE and exists in Amman, Jordan, where all we have to do is for one of the founders of our companies to get on a plane, land in Jeddah and Riyadh, and right away he has an operational bank account, he has contracts that he can sign, he can get sponsored and get work permits for him and his employees, and it would cost him a small fraction if he had to do it on his own. Then we see if he gets friction, if he takes off the ground, if that's a big market, then he has plenty of time ahead of him to be able to incorporate his own entity in Saudi Arabia, to be able to sponsor people directly, etc. So this is why, one of the reasons why I believe, it's, and I've seen it in my own eyes. So I couldn't agree with you more. And it gets even more difficult when you go into stuff like, like e-commerce.
I want to wrap up this question so that we can have time for more. Dany, you have a quick comment on this?
No, I mean, we're set up the same way you're set up for exactly the same reasons. I sat with the most successful Indian entrepreneur in the UAE. Actually, he's a regional businessman, massive business. And I said to him, what is your biggest problem? What keeps you up at night? What is your biggest concern? This is a traditional business, not online. And his biggest concern was, I operate in 20 countries in MENA. I have 30 sponsors in these countries. I can't move people from one entity to another. I literally have to build 15 silos within all these different countries with very little overlap because of the restrictions that Khaldoon has outlined. Absolutely. And it's a nightmare, but even the billionaire has to navigate around that in a traditional business, so I don't know if the grass is always greener.
Okay, we're going to take second question.
Yeah, hi. My name is Larry Langs. I'm a serial digital media entrepreneur from Silicon Valley. I resemble what Hany, I think, is looking for here. I'm also an intellectual property and corporate lawyer and an investment banker. I have been here for about 1.5 years supporting my wife's career, and I have gotten absolutely nowhere building any companies, getting involved with any type of, any part of the ecosystem, and I'd like to volunteer some of my challenges, and we haven't even discussed it. I think one of the biggest problems is the infrastructure. There is no bankruptcy law. If I write a bad check, I go to jail. If I go bankrupt, I go to jail. So talking about fear of failure, that's a really big issue. Two, there's no intellectual property laws. I wrote a business plan, brought in an Emirati partner who took my business plan, put his name on it, and then sent it around. And three, I think we need more of an entrepreneurial spirit. The entrepreneurial spirit, I think, here is really tied into the family groups. They do a lot of entrepreneurialism here, but it's not organized. There's no infrastructure. So if I could make a proposal, it would be take one of the free zones, put in some intellectual property law, some corporate law, and some
Larry,
bankruptcy law.
I'm going to have to cut you off. I didn't hear a question yet. But I appreciate it. Come join us afterwards. You get plugged in with us and the community. Well, I agree with you. IP and bankruptcy, this is something I think that all of this panel is aware of. But I need a question because we have 2 minutes and 15 seconds
Well,
left.
the question is how to get it going.
How do you get it going? Thank you.
Well,
Just go ahead and do it.
no.
Sorry to cut you off, but we are running on very little time. So I'm going to go with Sagar. And then we have Wael.
Hi, my questions to the entire panel. I think one of the things as an entrepreneur, what we also face is we meet a lot of VCs, but we don't meet a lot of VCs from the digital world. So what we're trying to do, half the time we spend at least 5 sessions explaining to them what digital is. And so how, as VCs, do you think that we can solve that problem in terms of recruiting more people on the VC side who understand the digital world?
Come and see Khaldoon.
Apart from you, Dany.
Yeah. So this whole panel is digital VCs. And most of the VCs, the traditional VCs that I'm aware of are really focused quite on digital. Maybe bring those guys to us. Wael.
Hi, my name is Wael. I'm a co-founder of Farah Bish. I want to follow up on
Amjad's question because he's sitting next to me. But in a more naive perspective, my question is, why until now we don't see a similar stock market like NASDAQ for the region? And if we do so and have one, do you think this will increase the potential of exits or more investors?
No. I mean, NASDAQ is a special case. It was a moment in time. I don't think, if you look at the history, the last decade since there aren't that many listings on NASDAQ in the technology. It's a moment in time. Realistically, you don't expect us to be at the same stage where a unique ecosystem, the most unique in the world, in America, right? Europe is like even a couple of decades behind them in a lot of respects. You don't expect to replicate this in the Arab world or in MENA over, this is a multi-generational battle. Myself and Khaldoon and Dany and Wael, to various degrees, have been at the forefront for the best part of 15 years. And it's going to take another 15 to 20 years, of the next generation to take it to the next level, right? Then we can start having, the thrills and, of a listed exchange for small and medium enterprises. I mean, for heaven's sake, even the big boards in a lot of our countries are so illiquid. It doesn't make sense. I mean, this is something we talk about later, okay? Right now, all of this, the opportunity to make money is immense. Khaldoon has his numbers, Dany has, everyone has a different perspective. But the opportunity to make money in the digital space in the Arab world is immense. The people who are taking the best advantage of it right now are the ones who have seen this in other emerging markets. The ones who have been to China, India, Brazil, and have seen that this is going to happen here sooner and later, and are willing to take the risk. There are people like us who are at the forefront, who try to be facilitators, or, because that's our job, to intermediate between us and the capital. But for whatever reason, the local capital isn't yet on board. And I'm not saying they're not going to be on board next year. More and more, the momentum is really, the dam is going to break. In a couple of years' time, we're going to sit in this room, and this whole session will be obsolete. You can rest assured on that.
So I have to wrap up the panel on this very positive note. The money is here. Come find it. Thank you very much for being. Thank you very much for being with us, and we'll catch you guys later. Thank you.